Yes, sir. Good evening, everyone. A very warm welcome to all. Today, we are presenting webinar on GIFT IFSCA, Navigating Capital Market Opportunities as a part of World Investor Awareness Week 2025. It is my distinct honor to welcome all our guest speakers, Mr. Saurabh Kumar, Manager IFSCA, Mr. Paras Jain, Assistant Manager IFSCA, Mr. Meet Pandya, Head Product Development, NSEIX, and Mr. Dharmesh Tejani, Head Product Development, NSEIX. I now welcome our Chairman, Mr. Arjun Shah, for welcome speech. I also welcome Pradeep ji. Isn't joined in. Welcome, sir.
Thank you.
Over to you, Arjun ji.
Thank you, Shital. Good evening, everyone. Welcome all to this webinar with IFSCA and NSEIX. In the month of September, we had visited NSEIX, and there we had an opportunity to meet with Bala sir, and he explained to us how NSEIX is building up its portfolio. So we thought, then why not we have a webinar on this and just give a incremental update to our broker members as to what are the new developments that are happening in GIFT City. So we thought, and with the World Investor Awareness Week going on, we thought what opportune moment for us to have this webinar and have very interesting products like the zero-day expiry options, etc., which are available now, and for them to update us. So please take it ahead. Shital?
Actually, we have a presentation to share, or should we have it more like a question answer session? We have.
So you can see a presentation, and towards the end, we will post the questions are coming up on YouTube. So I request all members to please put up. So we have already received a few questions that we have already forwarded to the NSEIX officials. Any other questions that the members may have may be put on the YouTube channel chat, and we will post them here on this Zoom chat box.
Okay, fine. Sir, Pradeep sir, would you like to add any opening remarks? Sir, you're on mute, sir.
Apologies. Thanks, Arjunji. Thanks, NSEIX and team. So this week is the World Investor Week, and we have been going around spreading the message of safe investing, and also since here the retail investor has not yet taken wings, we've been also able to make use of this opportunity to talk about the opportunities in the IFSC and the rules and regulations that we have brought over the past few years. Now, a couple of things. One is, while the institutional investors and the high net worth individuals and the so-called informed investors have already made use of the IFSC, they are making use of the IFSC. The retail investor is going to be a big thing as far as this year onwards is concerned, because we're going to have mutual funds, we're going to have the IPO, we are also having the BDRs and so many other things. So it's going to be an exciting time to be here at the IFSC. Now, once the retail investor comes, then automatically all other issues as regards protection and other things come, which is important for us as a regulator, the exchange as a frontline regulator, and also the intermediaries and other parties. So what are the things that we should do? So these are some things that we have to sort of keep in mind. So as a regulator, we'll certainly work with you. One of the things that we are trying to do is that while we are going with you for coming for inspections, what we try to do is that we sit with you and try to improve compliance and sort of give a fillip to those things, so that we are able to get better compliance, and ultimately the benefit is passed on to the investor in terms of robust handling, including onboarding and whatnot. But now, at this moment, it is important for people to understand at least 2 or 3 important regulations here. One, of course, is the listing regulation. Now, the listing regulations are not old. We have had a regulation since the past 4 or 5 years. in 2024, we brought in the new listing regulation. And these regulations have been largely countered on the lines of international regulations. So I think it will be quite an interesting session what Saurabh is going to present on this regulation. And while the bond ecosystem has been quite a hit here, sustainable finance ecosystem is also doing well now with the ECB borrowing related matters which RBI has done. I think this particular next 3 to 6 months, I think it's going to be an exciting thing for the bond borrowers also. Now, when it comes to the next important phase of capital raising, which is equity. Now, we are going to have the first equity issue, which is going to come, and Saurabh is going to present to you what are the things that are available here and how we have sort of countered our regulations. What are the things that we have sort of brought in, which makes it a very appetizing regulation to make use of to raise finance from this place. So that is something he will also be throwing light on both the pre-issue and post-issue requirements, disclosures in particular as to what makes, and things like minimum public shareholding, etc., as to why should this be a preferred place. Because today, if an issuer is going to look at an international jurisdiction to raise money, there are two things which are paramount. One is cost of capital. The second one is cost of compliance. Now, we have tried to sort of address both of these things, and I hope is going to be, it's going to be something which will be of use to the people. The second presentation for the day, which we are also going to have from IFSCA side, is from Paras Jain, an experienced officer on the fund management team. And he's going to give you a lowdown on a pretty successful ecosystem, which is the fund management ecosystem. Recently, in February 2025, we brought in certain changes to the fund management ecosystem by bringing the new regulations. As we speak, in fact, I was on the other room discussing the consultation paper for the new changes to the fund management regulations. So, which means that it's so dynamic that it requires a change. So that is something which also may happen very shortly. We should be coming out with the consultation paper very shortly on that. So Paras will explain to you the current requirements of the fund management regulations also. So I hope this program is going to be quite successful and useful to the participants, which I'm sure. I am thankful to NSEIX for organizing this program. And NSEIX also is making a presentation, I believe, and it will also be useful for you, for the participants here. So I wish this program all success. And I also would like to tell you that the participants that during the course of the presentation, in case you have questions, you can ask the people who are presenting, the presenters. But if you have any suggestions to us, please feel free to write to us, which we will certainly consider while we get down to amending the regulations. Because the objective of this IFSCA is to make this an ecosystem which is quite useful to everyone. And ultimately, if we don't heed what you have to offer, then we will not be probably doing things in the right earnest. So that is something which I request you. In case you feel that there are certain things which can be changed, which can be probably improved upon, please let us know. We'll be happy to do it. I wish the conference all success. Thank you.
Thank you, sir. We'll now be starting our presentation. So I'll be giving a brief overview of GIFT City, its basic concepts, the various verticals, especially capital market verticals, and some of the initiatives that we have kind of been focusing in the last few months and years. So I'll just share my PPT. So is the PPT visible to everyone?
Yes, sir. Yes.
Just yeah, so I'll quickly give a brief overview of GIFT City, just for the benefit of those who may be probably looking at this for the first time. So GIFT City basically has two parts to it. One is the multi-service special economic zone. One is the domestic tariff area. In the multi-service special economic zone, we have the IFSC, International Financial Services Center, So basically, it is set up under the SEZ Act, and there are various tax benefits. It's a special jurisdiction. So it was unified. It was established as a unified financial regulator. So in domestic side, we have RBI for banking, SEBI for capital markets, IRDA for insurance. So here in this particular jurisdiction, we have IFSCA. So all the powers which were earlier with RBI, SEBI with respect to banking, capital markets, so on and so forth, have now been under the IFSC Act. These powers have been delegated to IFSC. We draw powers from those acts, but we have been coming out with many regulations on our own. So most of the regulatory architecture we have already come out with. So once we have come out with our own regulations, our regulations will apply in these areas. Then some of the broad goals and objectives of GIFT City is, one is that it's like a gateway, like whatever global capital which is required to fuel our growth, GIFT City can be a gateway, and it can also be a gateway for inbound to outbound investments. So one more thing is it is about onshoring the offshore. Many India related businesses which were earlier being conducted from outside India, we want to get those businesses back to India to ensure that uh, the kind of employment opportunity and the growth opportunity, that we don't miss out on India related businesses. So this is one of the objectives. And we have been receiving a lot of support from the government. Honorable Prime Minister has also personally been monitoring this development of this project, and he has been very involved and very supportive. So just briefly covering the concept of GIFT City uh, from uh, from various perspectives and comparing it with the DTA and the foreign jurisdictions elsewhere in the world. So from a FEMA perspective, this is the most important point. From a FEMA perspective, it's a offshore non-resident, whereas in domestic tariff, from a FEMA perspective, you are considered all the entities are residents. So in that sense, this is like a foreign jurisdiction and, from a FEMA perspective. And even from a currency perspective, there is no INR related businesses here. There are 15 foreign currencies which are permitted, and that is listed. We have a special list, and this list can keep expanding over time also. From a tax perspective, we have a tax holiday under Income Tax Acts. Various carve-outs have been created for GIFT City. And from a legal perspective, again, whatever the laws that apply in India also applies here. But again, we have various carve-outs, like for example, Companies Act. We have various carve-outs. And we are the unified regulator here, whereas in domestic, you have different regulators. So this was just to give a brief conceptual understanding of what this jurisdiction is all about. Coming to the various business activities, IFSCA being a unified regulator, we have got into a range of activities cutting across banking, capital markets, asset management, insurance, various niche areas. We are also into things like foreign universities, and a lot of ancillary services also been set up here. So this is a hub of innovation, and a lot of activity across various things are picking up. And if any new financial services or products also are notified under the IFSCA Act, then that also can be permitted. This is just a slide to show how various businesses, they have gone to offshore jurisdiction, how one of our objectives is to get back. For example, a lot of funds, they have kind of been shifting from offshore jurisdictions like Mauritius to GIFT City. And earlier, if you see Ireland, a lot of aircraft leasing business was there. But once we came out with our own regulations, which was internationally benchmarked, then a lot of interest we have been getting even in these niche areas as well. We have the regulatory framework across all business verticals, most of them, and also all these regulations, we review it on a periodic basis. Like every 3 years, we have a mandate to review. And from a capital market perspective, three regulations are very important. For the stock exchanges, clearing corporates, depositories, you have the Market Infrastructure Institutions 2021. For the listing of various products, you have listing regulations. And from all the for all the capital market intermediaries, you have CMI regulations, capital market intermediaries 2024. There are also AML CFT guidelines, and those apply to various. And you can see we have all types of regulations cutting across all verticals. We have been expanding rapidly. Actually, now the number is almost close to 1,000 registered companies. So we'll be very soon touching that mark. The turnover also on certain products have really been very encouraging. And we have seen a lot of debt listings. The debt ecosystem in the GIFT IFSC has picked up. The ESG debt is also north of $15 billion. One of the areas which Paras will be covering in detail is the fund management ecosystem. That's one area we have seen a lot of activity in 3 years. And especially now with focus on retail funds, we are expecting that more participation, more vibrant market in that area. Also in various things like various areas like ship leasing, aircraft leasing, we are seeing a lot of growth and a lot of business activity. So I'll just quickly move on. Even banks, now we have about 35 to 36 banks, out of which 15 are foreign banks and 10 are systemically important global banks. So almost in all areas, we have seen a lot of growth. This is just a slide to show some of the big names, marquee names that have set up shop in GIFT City. And I'm sure this will only expand in the years to come. So you can see all the service providers also, KPMG, PwC, all you have all the entire ecosystem is actually in place. Even in DTA, you will have a lot of big names in the tech industry, and that will kind of have a feed-off effect, and it'll help to grow the entire ecosystem. Even GCC recently, the policies they've been very friendly and things like data centers. So this canvas is really huge in terms of setting up financial and tech entities. One of the key things that investors always look whenever they want to set up an entity is tax benefits. So GIFT City, this is probably the most important reason. As recently a survey was also conducted why GIFT City is being considered. So one of the key things was tax benefits. We have 10 out of 15 years tax holiday on business income. And there are various other tax benefits also. If you compare MAT, there is CTT, STT, GST, all that we don't have. Then there's a reduced withholding tax. This is also very important. This has been instrumental for debt listing to pick up here compared to various tax rates. For example, Singapore DTA 15%. And also there is for NRIs and all, in terms of KYC, they have certain ease of doing business initiatives like no PAN. All those things are very important. Also, state government also comes out with its own incentives under various policies. That is also a big benefit for GIFT City. Going across various verticals, I'll just quickly run through banking services. We have a whole range of activities. So I'll not be recently, I'm sure some of you must have heard the news about local dollar settlement. I think that will be a big enabler. Seeing this in, if you see this along with initiatives like video KYC and even things like payment systems, I think if all those things fall in place, it will give a huge fillip and boost to the entire ecosystem as a whole. Coming more specifically to the capital market ecosystem, we have two international stock exchanges. One is the India Annex, which is a subsidiary of BSE, NSE International Exchange, which is a subsidiary of NSE. Then we have two clearing corporations, India ICC and NSE International Clearing, and one depository consortium, India International Depository, IFSCA Limited, which is also depository for the bullion. We have over 120 capital market intermediaries, about 85 broker dealers, and you have all sort of investment bankers also now. We are likely to see a rise given that direct listing of equities may soon pick up. And then you have even one more important thing, we got some credit rating agencies. We are mandated that at least one rating should be from an IFSCA based set of registered CRA. So we are seeing two credit rating agencies, including S&P and CareEdge. And in fact, sovereign ratings, we have seen our own ratings improve. One of the experts have said that this could be an impact of the kind of sovereign ratings that are being provided in GIFT City. So a lot of developments. various products are available on the exchanges in the GIFT City. I'll not get into details. You can probably go and see in the website. There are different types: equity index, derivatives, currency derivatives, commodity, DR, so on and so forth. Mostly it is the GIFT Nifty which has picked up in a very big way. Then you have a route to invest in foreign stocks, top US stocks through UDR mechanism on the NSE-IX. And very interestingly, this is probably one more area that is likely to pick up. Broker dealers registered in with IFSCA and the subsidiaries of exchanges, these two categories, they can come as global access providers. We have a new framework. We're already seeing a lot of interest. So this is where your domestic investors can get access to products across the globe. And this is one area where there is a lot of opportunity for broker dealers. Equity listing, as Pradeep sir mentioned, we have very soon going to have, maybe in a few weeks time or so, we'll have our first listing, and where Indian companies as well as foreign companies, they can come and list on our exchanges. This is especially important for startups. Many of the startups which are unlisted in India, they can come and raise and attract global investors. Of course, it is initial days, but once it picks up, we are likely to see in future a lot of activity in this space as well. And here there is a trading in foreign currency. You have a long trading window, so there's a lot of benefit to investors. There are also tax benefits for. So this is definitely one. This potentially a game-changing proposal. Coming to debt listing in IFSC, we have seen again about $65 billion plus of debt listing, and we have a lot of benefits in terms of cost competitiveness, in terms of our alignment of listing framework. Even on the ESG, we have ensured that our benchmark, we are internationally benchmarked with principles of ICMA. Yeah, I have already mentioned this about credit rating system. So we have, there's a mandatory to obtain one credit rating from at least one credit rating agency in the IFSC. And CRAs, they can issue global scale ratings. This is just a small it's a slide wherein some of the ESG lending which we had given, it was showcased in the G20 events as an example. So this was an important sort of development. Moving over now more specifically to investment funds, I request my colleague, Mr. Paras Jain, to take over and then throw light on the various opportunities in terms of investment funds. Over to you, Mr. Paras.
Thank you. Thank you, sir. Good evening, everyone. This is Paras. I work in funds vertical here. We look after the registration side of it. So we'll go through a bit of what IFSC is, just adding up to what sir has said, and then we will see what kind of FMEs funds that we can have here, and some stats about how many funds, how many FMEs, and some names. Then we'll move to the fund structure and how to set up. So let's start. So just a bit of a IFSC. IFSC was set up in 2019. So before that, we have domestic regulators regulating the entities in the IFSC zone. But in 2019, a unified regulator named IFSC was set up, and the IFSC regulates all the entities setting up in GIFT IFSC. We have our first fund regulations came out in April 2022, and as Pradeep sir has mentioned, we have revised those regulations, and new regulations will come out in February 2025, and we have a provision. I would say we have a provision for reviewing the regulations every 3 years. So what means what are funds for? Means what IFSC want to do in the fund management? The IFSC should be the global hub for international fund management activities. We want it to be the hub, like existing hubs like Singapore, Hong Kong, Dubai. So we would like to see IFSC as a global fund management hub. Moving to further, why would a fund should be set up in a gift IFSC? There are few benefits that are available here, comparable to other jurisdictions, but there is an edge. So first of all, we have a single registration and unified regulatory framework. So we have a portal that is called a suite portal, and wherein anyone who wants to be set up any kind of entity that is in gift IFSC, it can be made an application through a portal, and it's a portal that is also connected with other other verticals also, where we like GST and SEZ and everything. So for the fund here, apart from the domestic side, you can have the funds can have leverage, and they can diversify. They have leverage flexibility. We do not set a limit on a leverage, but it is only be disclosed. We also have an SPV structure here. The funds can make co-investments, can do co-investments through the SPV structure. We have a very simple and registered process for the funds. It is augmented by the disclosure based regime that we have. We have circulars and we have regulations that are purely disclosive, which that you disclose the things and you can carry on your business. For foreign investors, we have the no pen is required for foreign investors, and our regulations are set up by the in conjunction with the international benchmarking. So we have a very robust investor protections, and we used to be transparent as much as we can, and we always strive to be as transparent to the investors, to the funds also here. And if you know, the India is a capital hungry place. So India needs capital to grow. We all have a vision of India 2047. So for that we need capital. So Gift City can act as a gateway for bringing that capital to India. And we are a cost-effective operations. And if you know how cost-effective it is, if you compare with the other jurisdictions like of Hong Kong, Singapore, or Dubai, you will find that the cost effective overall operation is a bit less than that there, so it makes attractive propositions for the funds to set up here. We have tax benefits for the 10 out of 15 years. We have tax holiday for the business income. And if you see the business is going on, the likes of Mauritius or Singapore, there are many Indian fund managers, but the business is focused on India only. So why don't that those fund managers come to India and do business for India? And we have a ease of doing business. Every day we just brainstorm how can we make life easier for everyone, for every entities that are setting up here. So we are continuously strive for that. Now let's see what are the fund management entities that can be set up in gift IFSC. So if you go through the regulations, there are three type of fund management entities that can be set up here. So just to clear one thing, we register both fund management entities and the funds. So what happens is the fund management entities, basically they are the fund managers. They set up a shop here, then they launch their individual funds. So what we have is these are three kind of FMEs that are here. First is authorized FME, then registered FME non-retail, and registered FME retail. There are certain conditions, so we'll move through that what they are is. So if you see what authorized FME is, what authorized FME mainly focus on niches investment areas. They are mostly funding for new ventures and the startups. They can launch venture capital schemes and they can launch family investment funds. Next, we have a registered FME non-retail. So for the funds ecosystem here, the most of the entities that are registered here are registered in this category, that is registered FME non-retail. So what they can do is they can launch restricted schemes. There are certain they cater to highly sophisticated investors and they manage funds from private offerings. So what they do is they have the PPM, that is private placement memorandum, and it is tailored to the need of the investors. Now this is registered FME retail. We are seeing lot of interest in the retail category also. So far we have around four FMEs, four retail funds that are launched from GIFT IFSC, and we are seeing a lot of interest in it. There's a lot more in the pipelines. So what we have is here the registered FME non-retail can do the activities of the authorized FME and the activities that is permitted for the registered FME non-retail. As we move up, that is registered FME retail, it can perform activities that are done by authorized FME, registered FME non-retail, the activities permitted by it. So there are certain eligibility criteria, track record requirements, and operational mandates which separate them. So we can have wholesome view of all of them. So few of the criteria I will mention here, like the capital requirements. There is certain capital requirement that each category of FMEs has to bring here. For authorized FME, it is $75,000. For registered FME, it is $500,000. For retail, it is $1 million. So we have also have a personal requirement that has to be based out of the gift FSC, and it is also different for different categories. For trade FME, it is only one, minimum one, and for registered FME non-retail, it is two, and for registered FME retail, it is three. And for retail criteria, we have some certain track record, like the FME must have a 5 years of experience, and some amount of 25,000 retail investors should be managing, and some the AUM that it should be managing before it can apply for a retail license here. So what we have tried to do here is that the we have segregated on the basis of risk also. The compliance is directly proportional to the risk. So for the authorized FME and registered FME non-retail, they mainly cater to the sophisticated investors. So the compliance requirement is comparatively less than the registered FME retail. And as we all know, retail is for the public, and public investors and for the masses. So that compliance requirement are high for registered FME retail compared to the authorized FME. Now there are a few numbers that I would like to touch upon. This data is as of July 31. So we have a fund management IDs of 186 as on July 31, but now I would say we have crossed 200 very recently. And number of funds, we have more than 300 funds as of date. And as on 31st May, the capital commitment that has been raised by the FME is 15.7 billion, and of which 8 billion are already deployed. So if you see, we have some big names. We will be touching upon that later also. These are the funds. So we have three categories of funds here: category 1, 2, and 3 in the restricted scheme space. And if you see, there are also types like PVC funds, hedge funds, and retail funds. So since the inception of the fund management ecosystem, I would say since the coming out of our first set of regulations, we have come a long way. If you see, we have a PVC funds, 114 PVC funds as of July, and 174 funds, hedge funds. These are, and in the non-retail category, in the restricted schemes, we are seeing a more of interest in the category 3 funds are there. So more than 60% what we have is the cat 3 funds that we have. Till July we have two retail funds, but now it has been moved to four, and there are many in the pipelines. So if you see, by 2022 March, we have 20 funds that are registered here. So, but you compare it for now, we have more than 229 funds. So it's a six-fold jump in 3 years. And we are looking for more numbers in this financial years and the coming financial years. So if you see, the fund ecosystem has really picked up. It's one of the hotbed for the gift FSC. And we have seen lots of interest in relocation also. The fund set has been already set up elsewhere, and they are trying to move it here. So these are the few of the big names that we have here in FMEs. If you see, we have TSP, we have Kedara, Multiples, Blue, 3 Zone 4, True Beacon, we have Novama, we have. And if you see, there are these are private equity names. There are big names in VC and PE. For hedge funds, we have Morgan Stanley, we have Arawat, we have Alpha Alternatives, Equitas. So these are some big names that have already have a shop here, and they are managing the funds from here. And we have AMCs also. We have AMCs that are registered in India. They have been registered here, and many of them has taken the retail license for like DSP. DSP have already launched a fund and it is an outbound fund, and it would be taking monies from the Indian citizens and investing outside. We have a Tata AMC. We have also here, and it has very recently launched the fund also. We have Kotak, Baroda BNP, and SBI. These are very big names that we are here, and we are seeing a lot of interest from them for the retail funds. There are credit funds along with that also. There's RS, Oaktree, PG. So this is what this is. It is a basic, typical AIF structure based in GIFT City. So what you will see here, this is an IFSC fund. So funds, what happens is the FME registers with IFSCA, they set up a shop here and take registration. Then they launch a fund here, that is IFSC fund. So there are two categories of investors. One is foreign investors, which comprises of person resident outside India, non-resident Indians. And there are then Indian citizens. So what the thing is, the Indian citizens, if you are any fund is taking monies from the Indian citizens, it has to be invested outside. It can't be invested in India. So what happens is for the inbound fund, the money is taken from the foreign investors, and it is the fund takes the money from the foreign investor. It is invested. It can be in India or it can be outside also. So for the Indian citizens, we have a rule, which the FEMA guidelines are there. Based on that, the person resident in India or the institutional investor based in India invest in a fund. So where they can invest here. So for the Indian persons who are taking monies, they can't invest in securities issued by companies in India or foreign jurisdiction. You can invest in securities listed in IFSC. You can invest in securities issued by companies incorporated in IFSC. And you can also do a fund of funds. You can do invest in other AIF also. So this is a typical AIF framework, typical structures that we have seen here. Now, how to set up a shop in FME and how to set up a fund in GIFT IFSC. So first, if you want to launch a fund here, you have to register first the FME. Now we have a concept of platform play also, where plug and play model is there. For the very basic things, first you have to identify a gift space in GIFT IFSC. So once you identify the space, you set up a company or you set up LLP. If you want to set up a company or anything, you have to take the registration for the register of companies. Then we have a suite portal here, and you can make application through suite. It simultaneously go to SEZ division of IFSCA and with the concerned division also. Like in the case of funds, it will come to our team. So you make a application to there, and once you get the approval, you can launch a fund based on the type of category of FMA that you have. For the registration of fund, the process is very simple for a non-retail and authorized FMEs. You say if you can come in a LLP from a trust form. You set up a trust or an LLP here, and there is a circular of April 5, 2024. There's a circular. So it has all the details which should be in the PPM and what are the set of documents that we have. And we have a checklist also there. So once you fulfill those conditions and you have all the documents in place, you can subsequently file with us, and it just in a matter of days you receive the approval for your fund. For the retail, you have to file the offer document with us, and when we go through the offer document, if there is comment, there are any comments, they are communicated subsequently. So I would like to thank you all for giving this opportunity, and thank you for your patience. Thank you.
Thank you, Saurabh ji and Parag ji.
Thank you. Thank you.
Thank you.
Lee at IFSCA, Saurabh Kumarji, and the team at IFSCA for being able to kind of outline what the opportunities are. And more importantly, I would like to highlight for the larger members who are on the call that myself spending over 20 years overseas market, especially in the US. This is one of the most progressive regulators that I have personally interacted with, and very forward-looking regulator. And we would also personally like to thank the IFSCA team, the chairman of IFSCA as well, especially for allowing and approving one of the kind of 0-day options, which is India's first product, and that too at GIFT IFSC. We are the very first exchange in India to have that. With that, I won't take much further time. I'll have Dharmesh from our end kind of run through the opportunities at NSE International Exchange, the product suites, as well as if there are any questions, we'll be happy to take them post the presentation. Dharmesh, over to you. Thank you.
My screen is visible. Hi, good evening, everyone. So I had the product development out over here, and I have almost more than 15 years of experience in the capital market throughout investment banking and on institutional brokerage side. NSE International Exchange is a wholly owned subsidiary of NSE India, and one second, isn't it visible? No, I already moved to the next slide.
It is visible.
No, this is visible to everyone.
Yes, yes.
Are you able to see the second slide? Let me share it again. Let me share the screen again. Yeah, so we are a 100% subsidiary of NSE India, and we commenced our operation in GIFT IFSC since June 5, 2017. Our vision is also aligned with Government of India and the GIFT IFSC to become a preferred global gateway for both inbound as well as the outbound investment opportunity, as well as the hedging requirements for market participants. We are the first and only exchanges in IFSC with exemption from the CFTC and SEC class release. That means that the clients from the US side can participate in the derivatives listed on NSE International Exchange. Over the years, we have been accolade with awards in various global platforms. On the primary market side, we offer the debt securities market where we have established over 68.3 billion plus of MTN program. And on our partnership across global with Singapore Exchange on Nifty derivative products with the clear stream on settlement of securities and collateral management. And on data dissemination, we have a partnership with Bloomberg and Definitive. On the capital market ecosystem, already Saurabh has covered at a larger level on entire financial services across the banking, insurance, capital market, fund level. This is basically highlighted related with the capital market ecosystem. IFSC authority being a unified regulator, and our parent company NSE India being the largest market infrastructure institute in India, also played a pivotal role in development of capital market ecosystem in GIFT IFSC. They invested 100% into the stock exchange, NSE International Exchange, on the clearing corporation side, International Clearing Corporation. They also invested into the India's first spot bullion exchange, which is International Bullion Exchange, and India's first global depository, which is IIDI. Apart from the market infrastructure institutes, we have intermediaries which play a major role in servicing to the issuers as well as the investor level. We have 85 plus trading members. More than 20 plus clearing members, fund management entities, which are 177. Already we have seen in the slide, which is now at 186. We have a depository participants, distributors, custodians, and the credit rating agencies. We are a multi-asset universal exchange, and we operate for more than 21 and a half hours compared to India markets, which operate from 9:15 to 3:30 p.m. So we overlap to Asia, Europe, and US trading hours. Our clearing cooperation arms offers the clearing and the settlement guarantee for the trade happens on the exchange platform, and all the transactions in IFSC, which traded and settled in the US dollars. As I already mentioned that, we are a global gateway for both inbound and outbound investments and the hedging requirements. So just to highlight that, for the foreign investors or NRIs or OCIs who wanted to participate in India growth story, right now we are offering derivatives products. So we have equity indices, futures and options. So all the listed derivatives, equity indices on India market are available at NSE International Exchange. So it's being a GIFT Nifty 50, GIFT Nifty Bank, GIFT Nifty IT, GIFT Nifty Financial Services, GIFT Nifty Next 50, and GIFT Nifty Mid Cap Select Index. So those are the 6 index derivatives contracts are available on NSE IX. For single stock futures and options, all the contracts which are listed on Indian markets are also available for foreign investors over here. We are the first exchange in IFSC who offers the fixed income derivatives contract, GIFT Nifty Bharat bonds. On the currency side, apart from INR USD, we are also offering the 6 currency pairs derivatives. On depository receipts, we have already listed a secondary listing of Dr. Reddy's ADR on our platform. Debt securities market, right now we have almost 55 plus issuers have listed their debt securities. At IFSC level, already 65 billion plus of securities has been issued and listed on exchange platforms. We also offer the sustainability exchange platforms where issuers can raise sustainable finance and use the proceeds for their renewable energy program or any other sustainable financial investments. On direct equity listing, again, Saurabh ji has highlighted on a higher level. Just to highlight over here that, in IFSC on the exchanges, whether it is a IFSC based company or a Indian company or a foreign company, any of the companies can come over here and raise the fund and list their securities on IFSC exchanges. So for your investors' perspective, if they are the foreign investors, they can invest into any of the IFSC based or India based or the foreign based issuers. Equity securities listed on exchange platform, or if your clientele or your investors are from India under the LRS liberalized remittance scheme, they can invest into the foreign equity listing. So right now, we NSEIX have already received one DRHP from XCD management, which has been already filed. We are the designated exchange, and in the next couple of months, we will see a first equity listing happens in IFSC. We are also in discussion with many other issuers from US based startup companies from the Middle East companies who are also looking around for raising the fund from the IFSC side. So apart from the broker dealer side, we see that there are many of you have a investment banking arm as well. So this is also apart from the broker dealer, there is an opportunity for you to set up your shops over here in IFSC to get an early mover advantage for fundraising activities. This is all for the inbound access, and on the outbound access, we are right now offering top 50 US stocks in the form of unsponsored depository receipts, which is available for Indian resident investors in the liberalized remittance scheme of RBI, so which is allowed every year $250,000 per individual limit is permitted, and we are offering a fractionalized investment. So just to give you a highlight that if the Apple shares, which is currently trading in Nasdaq or NYC at $200, in IFSC the depository receipts, which is a predefined fractional investment. So we have a fractionalized the quantity. So let's say we have kept the ratio of 10 depository receipts equivalent to one Apple shares. So one Apple shares in NYC and Nasdaq is trading at 200, whereas the same value of 10 UDRs with the price of $20 are trading in NSE IFSC. So remain though the value of the investment remains same at $200, but now this is a fractionalized investment to reach out to a wide range of Indian retail investors. On the tax benefit, we are a tax neutral jurisdiction. We have a tax benefit for investors as well as the entity set up in the IFSC, which Saurabh ji has already covered in his presentation. So NSEIX SGX Gift Connect is one of the milestone that not only Gift IFSC is proud of, but it is a historical moment for Indian capital market. On July 29, 2022, our Honorable Prime Minister has inaugurated the NSEIX SGX Gift Connect, and later in July 2023, we have gone the full commencement of NSEIX SGX Gift Connect, and now we have rebranded the SGX Nifty to Gift Nifty. So since July 3, 2023 till date, we have achieved a cumulative volume of almost $2.2 trillion. We have achieved a highest single day turnover of $22.88 billion and all-time high open interest of $20.84 billion. On an average, we are clocking a turnover of around $4.5 billion. This is to give you a month-on-month volume comparison that on an average we have been $90 to $100 billion turnover we are seeing in the Gift Nifty contracts. In the open interest side, again on an average around $15 to $16 billion of outstanding open interest are there in the Nifty Gift Nifty contract. This is giving you a comparison between the trading in Nifty 50 on the onshore market in India versus NSE International Exchange in Gift IFSC. The orange color shows the trading turnover, monthly trading turnover in Gift Nifty in IFSC, and the blue color will show you Nifty 50 turnover in onshore market in India. So on an average, we are almost double the volume than India market. Similarly, on the open interest side, we are having almost 3 times outstanding open interest than the India market. On 0 day to expiry Gift Nifty option contract, so we are proud to announce the introduction of India's first 0 day to expiry options contract on India's benchmark Nifty 50 index, which has been launched from the Gift IFSC, and we will commence the trading from 13th of October 2025 on the Monday. Again, designed for precision intraday trading, 0 day to expiry options respond to market movement, manage short-term risk, and allow flexible strategies for India's flagship index. It is worth noting that such contracts are not even traded in established global financial jurisdictions such as Singapore, London, and Hong Kong. They are offered only in a limited, very few select jurisdictions worldwide. So we are thankful to IFSC authority for its progressive and forward-looking regulatory approach, which has made it possible to for NSEIX to launch such an innovative product in IFSC. So these are the product specification. On the tick size, lot size remains the same. It is a daily expiry contract. So each daily contract will expire at 3:30 p.m. At India Standard Time, and the new contract for daily expiry we will launch after 3:30 p.m. India Standard Time. On the cost comparison, just to compare, this is on the future side, future transactions. So this is a very interesting slide that comparing IFSC trading cost versus India trading cost on the Nifty 50 futures. So if you compare the onshore Nifty 50 future worth of 1 crores and equivalent size of GIFT Nifty 50 futures on IFSC, you can see that if you are coming through a prop trading account, you can save over 96% of cost. While if you are executing a order for your client, you can save over 87% of your transaction cost compared to India market. Basically, in IFSC, as I mentioned, that this is a tax neutral jurisdiction, and the statutory taxes are not applicable over here. Just to highlight that, we have a transaction fee on prop side. We charges 40 cents per lot, and for executing client order, we charge $1.50 per lot. This is a similar comparison in option side. We have compared, premium turnover of rupees 1 lakh equivalent with similar premium turnover executed in the GIFT Nifty options. Again, in GIFT Nifty for executing prop, we charge 0.05% on premium turnover, and for execution for client, we charge 0.10% on the premium turnover. Again, if you are coming as a proprietary trader, you save 48% over the India market cost, and for executing the client cost, it is remain almost the same. On reaching out to global investors, NRIs, EFIs, and the Indian diaspora through GIFT IFSC, they can leverage this platform for global gateway, both for inbound investment as well as the outbound investment. Through India Access over here with the innovative fund structure framework from IFSC authority, Indian diaspora can invest into the Indian markets. Again, recently the IFSC authority has come out with the global access framework where the exchange subsidiary and the registered global access provider can offer global investors as well as the Indian resident investors under the liberalized remittance scheme of RBI can invest into the global market. Over here, I want to highlight that, as a NSE International Exchange, we are the first global access provider which received the license from under the gap from IFSC authority, and we are launching our 100% subsidiary NSE International Exchange Global Access shortly. We are planning to offer, we are tying up with a few broker dealers, foreign broker dealers, and offering more than 150 global exchanges across the multiple asset classes, whether it is global derivatives, global equities, ETFs, commodities, currency. So it is a one seamless gateway for global investment through NSEIX Global Access. Also, through IFSC Capital Market, the exchanges can offer various products for the secondary market and the primary market, which are listed on the exchanges. You can participate in this offering as well. How to access for eligible foreign investors? You can become, you can be a registered broker dealer with IFSC and get a license from the exchange. Also, through fund management entities, you can become a sponsor and the founder, or a client of a broker dealer. For non-resident investors and OCIs, you can become a client of the registered broker dealer in IFSC, or if you are coming through a fund management entity, you can become a sponsor or a founder or investors in the fund entities. Accessing through NSE International Exchange, both NRIs and overseas citizen of India are eligible. It's a very simple structure for accessing the IFSC capital market. As I mentioned, we have already 85 plus broker dealer. You can open your trading account with any of these registered broker dealer. You do not require to open a bank account in IFSC. Through your foreign bank account, you can transfer the fund to the registered broker dealer's bank account. Once your fund reflect into the broker dealer's account, you can trade on any of the securities which are listed on the exchange platform. So the benefits, if I give you a highlight, the ease of access, so you don't have to bother about the NRE or NRO account complexity which you face in the Indian domestic market. Profit repatriation on the derivative side, there are restrictions on repatriate profitability from India to your foreign bank account. Here in IFSC, without any restriction, you can repatriate your profits. We offer a longer trading hours compared to India market. There are tax efficiency, no statutory taxes, no CTT, no GST, no stamp duty, no capital gain taxes here in the IFSC. So you can generate a higher return and at a lower trading cost value. And there are no PAN card requirement for NRIs and the OCIs. We also offer a distinct participation for high frequency traders and other hedge funds, global hedge funds, and the Delta One desk. So the IFSC authority has come out last year with a very distinctive mode of participation in the form of remote trading participants. So to be eligible under the remote trading participants, you have to be a broker dealer with the exchanges listed over. There are almost 30 plus exchanges are eligible for the RTP. If you are a member of any of these exchanges, you can be eligible for remote trading participant, or you are a regulated entity under the foreign jurisdiction. Either of these two conditions, if you met, you can be a remote trading participant. And in terms of the eligible criteria, the one condition I want to highlight is that you are permitted only for the transaction in the cash settled derivatives product under the remote trading participants, and it is permitted to trade only in the cash settled derivatives contract. So these are some of the distinct benefits that taking a remote trading participants. You don't require a physical setup in the GIFT IFSC. So the cost related with the infrastructure maintenance, operational cost, which can significantly reduce. Ease of access and the quicker registration. Registration as RTP with an SCIX is a very short time. The lower trading cost, as I mentioned in my future and option contract, that in a derivatives market for prop account for futures trading, we charge a 40 cents for a dollar and 0.05% on a premium turnover for prop traders. You have a direct connectivity with the exchange. You can set up your polo in the exchange. There are no currency risk, and as in all trades are settled in the US dollars. And we offer the longer trading hours. On the global side, on the global stocks, apart from the global access provider, we are starting up very shortly. We also offer the outbound investment under the unsponsored deposit receipts. For that, we offer the top 50 US stocks in the fractionalized investment under the RBI's approved LRS route. Again, on the raising fund, the companies which are eligible for listing of securities, IFSC-based company or foreign jurisdiction companies or companies incorporated in India. There are a lot of offerings which are available, options are available for raising the equity as well as the debt securities. On the debt securities market side, we have established around 68.3 billion of MTN program. There are Indian issuers as well as the foreign issuers are listed. So DFCC Bank is the first foreign corporates which are listed on our platform. Apart from that, the well-known name is NTPC, Indian Oil, HDFC Bank, ICICI Bank, Adani, IIFL Finance. So those are the issuers who successfully raised the fund from IFSC and listed their securities on IFSC platform. I think so. This is one of the useful slide for the broker dealers who have joined today for the webinar. So, if you are a SEBI regulated broker dealer in India, now with the SPU framework, which in May 2025, Security Exchange Board of India has released a circular that you can choose to come as a branch setup in GIFT IFSC. For setting up your entity, first you have to set up the IFSC entity name in MCA portal and apply for the company document. You have to identify the office space and get the provisional letter allotment from the developments. After incorporation of your GIFT IFSC entity, you can register on the suite portal with and post verification of the document. You can apply for the SEZ approval and the broker dealer license on the suite portal. Our membership team from the business side can guide you, can also help you out on filling out the forms and any queries related with the suite portal or the membership application. Once you receive the resolve the IFSCA queries, the exchange will also offer the principal approval for the membership, and you can submit the final document and the application form with the IFSCA registration for the membership from the exchange. This is the exchange fees and base minimum capital requirement. So this is a very similar structure which available in the India market. So we offer the trading members and self-clearing members, trading members and clearing members, and the professional clearing members. So these are the application fees and annual membership fees. For trading members, we require a net worth of $135,000. For trading come self-clearing member, the net worth requirement of USD 675,000, and for TM and CM, the net worth requirement is USD $1.35 million, and similarly for the professional clearing member. On the way forward, we have a plan for equity listing. There are on the REITs and InvIT listing, ETF and the mutual fund listing, and offer other sustainable products under NSE International Exchange. So this is all from the exchange side, and I think so. We can open the floor for question and answer. Yeah, hi Arjunji. Shital.
Yeah, yes.
So we can open the floor for Q&A.
Yeah, so we have already received queries from the members. Okay, so you want me to read out, or Marina can read?
We can read out, Shital.
Okay. So the question is, want to know the development of the equity segment in GIFT City.
Okay, I think so. I will take it up. So as you know that, in July 2023, our Honorable Finance Minister has announced the direct equity listing from IFSC. Before that also, the foreign equity listing was possible when the first listing regulation in 2021, where IFSC authority has come out with the equity listing. So that point of time, the Indian public companies were not permitted, only the foreign companies were permitted. But now, with the latest regulations and all the enablers from the government side, Indian public companies as well as the foreign companies can come and raise the fund and do the listing over here. So as I mentioned that, the first first equity listing is happening very soon. We have received the DRSP and we are the one of the designated exchange in the IFSC side. And also, we are in discussion with the few startup companies as well as few companies based in US and the Middle East who are exploring the opportunity for raising fund from the IFSC.
Okay.
Yeah, Dharmesh ji, I would just like to add one small point here. So
Sure.
basically, the way we have framed our regulations, and this is an important point, we have benchmarked our regulations with global centers like Hong Kong, Dubai, London, and all. And if you look at from a regulatory perspective, the IPO criteria, the eligibility, we have made sure that aspiring startups, particularly unlisted startups in India, they have a very good chance of it's a very good opportunity for them to get listed here because we have also kept the market capitalization criteria. So even if they don't meet, let's say, revenue test or let's say profit test, there's a market cap thing also of $25 million. So we have framed such a way that it is all inclusive of even startups and various other. And even for listed companies, I believe we are with SEBI having a framework. We'll come out soon with a framework where even listed companies they can get dually listed here. So this once these things happen, then I'm sure this will pick up over a period of time in a very big way.
The next question is on how investors will be protected when the tariff and world economy challenges if customer investing in international stocks.
Yeah, so I think this is a very sort of generic question. It is, if you see the current geopolitical scenario, the tariff situation, all that stuff, I think these volatilities happen, and again you have stable markets. So these tensions will arise, but the fundamentals of India's growth story remains very intact. Equity markets have been holding on. Of course, currently, if you see gold and silver, these commodity prices rising. But if you see basic fundamentals of Indian forex, our overall growth projections over 25 years, the kind of talent pool that we have, the cost we'll see a lot of startups coming up from India. So, and the kind of money that is flowing into mutual fund space, the kind of SIPs that we are watching, despite all that, our markets are still holding on. So I don't think so. These blips will happen on and off, especially the current regime in US, bit uncertain. But at the same time, we don't see these kind of things lasting forever. The things will settle down, and markets over a long period of time, they always give very good return, more than 10, 12, 13, 15%. So if patiently waiting and patiently investing, I don't see any problem in equity markets also. Anything you'd like to add, Mr. Ramesh ji or anyone?
Yeah, sure. So again, I think so, Shitalji, the question is that the market dynamics, when investing into the international markets and whether the tariffs or certain global news which can impact into the investment into the international stocks. So again, this is completely into the fundamentals, market dynamics. We've seen that recent US tariffs that how that impacted in certain sectors and certain economies, and that is the hamper the return of investing into the global markets. But if you see that, if as Saurabh ji has mentioned that, when you have a fundamental stock, then there is definitely over the period, if you remain invested, you can definitely get a return over the period. So again, this is completely into the fundamental and depend upon the market volatility and how that news will impact into specific sectors or specific stocks.
Next question is, would like to understand business and tax benefits of GIFT City FPI, and also if such FPI can invest in an India Cat 3 AI.
Can you please,
Pardon?
can you please repeat
Yeah,
the
Pardon.
question? Can you please
Okay.
repeat that?
Would like to understand business and tax benefits of GIFT City FPI, and
Okay.
also if such FPI can invest in an India Cat 3 AIF.
Okay. So the thing is, the IFSC as a jurisdiction is a foreign jurisdiction in in perspective of FEMA. So if you are having any fund in GIFT IFSC and you want to invest in India, it has to be through FPI only. So once you have set up a fund, if you are setting a fund in GIFT IFSC or Singapore or Mauritius or Hong Kong or Dubai, it is all same from the FEMA perspective. For the FPI, when you are investing in India, you have to go through FPI route or FDI route, and the rules governing them kicks in by the SEBI or the RBI. So we are, and the fund setup here can all many of the funds that are here are have taken the FPI license. They are investing into India.
I think there are also various, in general, lot of tax benefits for entities set up here. I think
One benefit
and
that we
also
do
for
have,
different categories of
one benefit that we do have is for the funds setting up outside of the GIFT IFSC in foreign jurisdictions, they can have a cap. They have a cap of 50% NRI investments on the broader level. So but in GIFT you can have 100% NRI investment, certain meeting certain criteria. So this is a benefit of being setting up a fund in GIFT IFSC and investing into India through the FPI.
Okay.
Thank you.
Need clarity on product available to different class of customers. This is a kind of need
different
clarity
class
on
of.
different class of customers.
I mean, your meaning classification of retail, non-retail. Is it?
Classification of, yes, I think
It's a very great question, Shital.
So if I can shed some light, so the thing is what we have in the regulations, the type of FMEs that we have, I have talked about in my presentation, registered FME, non-retail and authorized FMEs. There is a retail category. So for the FMEs that are having non-retail category, they can only onboard the sophisticated investor, that what we say them, and they have a threshold of investing minimum at least $150,000. So I can say it's a one class of customer. And for the retail, they can raise monies from the public, from the general customer for whatever they have. The minimum investment is there. And we have also a concept of accredited investor. There are certain rules and regulations which means which the fund management entities that are here, if the person are following or they are meeting the criteria, they can be designated as accredited investors. And accredited investors have some benefits in lieu of how much investment they can make and in which instrument the investment can make. So I would say it will just address the different class.
Also, as till now, the thrust was more on non-retail, but of late, we have seen a lot of activity happening on the retail part, and I believe some fund setup here have even a much lower ticket size of.
We do have 4 retail funds in
Funds
which
and-
2 are outbound funds. Outbound funds means they will be raising money from Indian residents and they will be investing outside.
And
And
ticket
to
size.
what we have heard, ticket size
Ticket
is I
size
guess
is like
5,000.
even I think $500.
Yeah, it
One
is
of I
$500.
think Tata, one of the
Yes, yes.
entities set up here has a very small ticket size, relatively small. So that will boost more participation from retail and probably and also there is some restriction for the mutual fund industry as a whole as to how much they can invest. I think there's a certain cap on the domestic front. So people once that cap that limit I think is getting very close and it gets breached. So a lot of those kind of investments through the LRS, they may come through the retail funds that have been set up here for investing in global markets.
the fund management entity can be set up.
Fund management entity can be set up where?
GIFT City.
Yeah.
Yes, it's the first step that you do
Yeah.
if you want to launch a fund.
In fact, we have seen so many FMEs, I think about 180, 200.
We have.
Yes.
Okay.
And many have kind of shifted also from operations from outside offshore. Yeah, we have seen a lot of migration of funds happening due to various benefits that are associated with gift types.
Is office at GIFT City mandatory?
Yes, there is mandatory requirement of setting up an office here, taking up space if you want to get registered here. and also have a, especially I'm talking from a capital market intermediary perspective, and I believe the same for fund management entity also. You take up office space, you have to have minimum human resources. We have kept currently at a minimum two people, one principal officer who is in charge of the entire business, and one is the compliance officer who takes care of various compliances and all the regulatory part, and minimum two. So this is mandatory from our end, and we have certain eligibility criteria. This is to ensure that we have certain sort of because a lot of tax benefits people take from here, there should be substance requirement also here. It should not be just another just you have entities with no people, just back office and just using tax. So we are not trying to be a tax haven of in that sense, but we want to make sure while we have tax benefits, various things like cost competitiveness, talent, all that stuff, but we also make sure that we have enough substance requirements, and also in terms of regulatory compliance and investor protection, those kind of things also, we are equally very aware, and we are very careful in these aspects as well. Thank you.
So just wanted to add on Saurabh ji that he has covered just if I want to highlight on the broker dealers perspective, if you are a Indian registered Indian SEBI registered broker dealer and wanted to set up your office, yes, of course you have to establish your presence here in the IFSC with PO and CO plus. Otherwise, if you are a foreign HFT player, high frequency traders or a Delta One test, which I highlighted that as a remote trading participant, so you can in under that circular, if as I mentioned that if you are one of the broker dealer of registered broker dealer of the exchanges, which 30 plus exchanges which have been highlighted in the IFSCA circular, or a regulated entity under any foreign jurisdiction can set up a remote trading, become a remote trading participant without establishing of the offices.
I
But
think
I believe we
this
are
is for this for prop, I think, right? Only for prop trading.
for
Yeah.
HFT, prop, Delta Desk,
Yeah.
and even there are a
Yeah,
lot of funds
but it's a
which.
special permission like for I think this could also pick up RTPs.
Right, right. But I guess
Yeah.
I believe we have a more of Indian broker dealers who have joined on this call. So of course, yes, that you have to set up an entity over here in the GIFT IFSC.
But I think eventually it can take off once the jurisdiction kind of matures. Then if people, if they are not initially wanting to set up shop here, special sort of carve out has been given in certain areas with certain jurisdictions that they can do this activity, trading activity in certain products. So yeah.
Now the next question is, if I create subsidiary in GIFT City, then are the profits earned in GIFT City taxable when repatriated? Also, what happens once 10-year tax holiday in GIFT City expires?
Yeah, so regarding tax benefits, actually it is the government of India, CBDT, they kind of make the rules, regulations. I think the 10-year tax holiday was given as a initial sort of benefit. There have been representations also to extend this benefit, and discussions are going on. But we as IFSCA, we don't kind of get into tax. It's not in our domain. We do have representations in terms of tax benefits. But I believe IFSCA as a jurisdiction, forget just the tax benefit part, as a jurisdiction in terms of the kind of players that are coming, the global banks which are setting up, the kind of volumes that we might see, if it will mature, you will have so many other benefits which will go. It, for example, foreign trading. So, so those kind of benefits, of course, there'll always be certain tax benefits, but this is something which Government of India and CBDT. You would like to add any other?
Okay, sir.
Hello.
Yeah, Dharmesh, would you like to
Yeah,
add?
yeah. Hi. So yeah, as correctly Saurabh ji has mentioned that on the taxation part that it's better that the broker dealer check with their CA and the tax consultant. But as in IFSC, there are no statutory taxes, or there are 10 years income tax holiday, and post that there is a 9% MAT applicability. So for repatriating back to India, that again is a thing that we suggest that you consult with your CA or the tax consultant.
The next question is, can a IFSCA registered broker dealer establish an FME in the same legal entity?
Yeah, I think there is no restriction. There is no restriction for broker dealers to also set up as an FME.
But there are some ring fencing requirements.
There are ring fencing requirements. It is the law is as such silent, but on a case to case basis, we do receive comments from various divisions, and we have precedents where on a on a conditional basis, I think we have given registration.
We have FME that have already have a broker dealer license.
Yes,
They're
they're operating,
but they have to
ring fence
both
that make sure there's certain ring fencing, there's some separation between those two businesses. And so, like for example, principal officer has to be separate. So you can't have the same person.
They are in silos. So if you are following one regulation, you take this license. If you are following other regulation, you take those license. The only thing is that you have to ring fence all the operations. Like say one entity is taking doing activity for 3 verticals or 4 verticals, but they have to ring fence it. As long as one regulation does not bar you from taking another type of license, you are good to.
Yeah, and also within the capital market intermediaries regulations, also the same entity can apply for multiple intermediaries, and you in that case the net worth criteria is highest of whatever is applicable in the categories which they have applied. So it's not in addition. You can just maintain the highest net worth criteria in terms of wherever it's highest in whatever business categories you have applied. But I think beyond the CMI regulations, if there are same entities applying for, let's say, FME, then the network will be over and above in separation to whatever is being prescribed for the CMI.
The next question is whether resident individuals in India can trade in GIFT City and how.
I think through LRS, they can access various products. So
FEMA guidelines.
Yeah.
As per FEMA guidelines.
Anything, yes. There are restrictions. There are, of course, restrictions. For example, if listing happens, IPO, for an Indian company listed here, you cannot have resident Indians trading. So there are certain restrictions, but yes, they can.
So, ma'am, on the exchange side, as I mentioned that we have top 50 US stocks which are offered for Indian retail investors under the RBI's LRS. So every year, $250,000 of remittance is permitted and allowed to invest in the global market. The only condition that they are not used for the margin products. So it can be invested into the equities, bonds, or ETFs.
And one more thing I want to add, like especially after global access has been like new framework has come, and I think that is one big opportunity. A lot of Indians are anyways trading. They're investing in global stocks across the market, and right now it's an unregulated space. There are discussions about how we might request SEBI to even sort of have a requirement wherein if you are accessing global markets, it should be through GIFT IFSC. That's because here the comfort of regulation is always there, and there is some sort of protection. Of course, markets are always volatile, but some sort of comfort we can give to the investors who are accessing global markets if they come through GIFT City in a regulated environment. So this discussion is going on, and if that happens, I think GIFT City will be a very important gateway for Indians to invest across the globe.
How to get office space in GIFT City?
This is actually not in our purview, but you have to contact maybe the builders here and then accordingly.
So, Shital ma'am, so whoever is interested or whoever wanted to access, we can share the developers' contact detail over here. So there are a lot of developers out here, and they are even apart from that, we have a co-development space as well that ready to plug and play. Offices are also available, so that we can introduce you to.
And just like to add that earlier SEZ powers, like we are also regulated under the SEZ Act, apart from the IFSCA Act. So SEZ Act powers were under DC Divisional Commissioner earlier, but now that Divisional Commissioner powers, DC powers have also been vested with IFSCA. So in that sense, whatever issues, like for example, if you need any LOA approvals and all, it is our own IFSCA which has those powers. So ultimately, you will not kind of face too much of a problem in terms of those requirements also.
Right. Okay. Next question is, would like to know how the recent circular on daily expiry impacts future plans or institutional business.
Yeah. So, ma'am, we have seen a strong interest among the traders, market makers, and institutional participants. So there are a lot of HFT players and Delta One test guys who have interest in this product. So there is a strong interest. Even we have seen a strong interest from the Indian broker dealers who wanted to, explore the opportunity in setting up their offices over here and explore the zero DT contracts. Also, there are, right now we are offering on the single product Nifty 50, but based on the interest received from the market participants and their feedback, we will definitely, on the success of Nifty 50 contracts, we can see the similar zero day to expiry contracts in the other index also.
Okay.
That would be great if that happens. If you look at other indices which are no longer traded, like Bank Nifty, that'll be a game changer.
Definitely, sir. But we also, Arjunji, that if possible, that today this is a seminar we hosted on a larger scale, on the market opportunities and on the primary and secondary market side and the fund management side. But also, if you see, interest from our broker dealer community that they wanted to have specific webinars for product specification on zero day to expiries opportunity, we are happy to schedule a call and join with you on zero DTA contracts.
Sure, sir. Definitely.
So that's all. Now, I request Saurabhji, Parasji, and Dharmeshji to give closing remarks, if any.
I'll just
to
say
sum up.
that
Yeah,
yeah,
please.
just can I go? Can I?
Yes.
Yeah. So I would just like to conclude by saying that Gift City, Gift IFSCA, the entire project is a very long-term sort of it's a very key pillar in our Viksit Bharat, whatever the agenda we have. We want to, it's almost like you're trying to, what you have Make in India in terms of manufacturing, in terms of being a service provider, not just to India in financial services, but to the entire world. So this project will require sort of conviction, belief, faith over the long run. The early movers are certain to kind of become big names in future because as we see in next 2-3 decades, the fundamentals are very, very strong. And there is no reason as to why we should not have our own international financial center because you have London, you have New York, then why not India, which is very soon going to be the third largest economy, and we'll close that gap also in next. So it is but natural, and Gift IFSC should cash on this opportunity, and probably 10-20 years down the line, we'll be hitting in the top 5, top 10 centers, global financial sectors. Right now, also we have already come in top 50, even beating Mumbai in terms of global financial that index. So if, from a international financial perspective, so we need to keep faith in this project. We need to be convinced that we are on the right path. Of course, there'll be hiccups, but that's what makes our job and role much more interesting. So all the best for all the stakeholders. That's it. This is my problem now. So Paris, you can join.
I would say GIFT IFSCA is an exciting place, and there's a lot of action going on here. So it's a hotbed now, and we are seeing a lot of interest, and we have come a long way since its inception. So I would just say, just explore the GIFT city once. If anyone wants to set up their units here, you just once visit it, you will get the feel, you will get the vibes that this is a place that is going to be a next global financial service center. Thank you.
Yeah, Dharmeji. You're on mute, Dharmeji.
Am I audible?
Yes, very much.
Yeah. I think so. This is the right time that the Saurabh ji has set up a right context. With simplified license onboarding and the operational process at IFSC with digital infrastructure setup and the single window clearance within GIFT IFSC. This jurisdiction will make a globally competitive jurisdiction, and there's a lot of opportunity for Indian brokers to expand beyond the domestic boundaries and cater to international investors. So, as I said again, this is the right time for our Indian broker dealers, to think globally and integrate with the international capital flows.
Can I just add one more thing, which very recently, like we have started, I think, local settlement of USD. Just very recently, FM announced that this will happen in GIFT City through the stancing. If you see this in parallelly, if you see a lot of initiatives like video KYC happening, like digital payments happening, like IPO happening, like global access new. So if you put all this together, like then you will see that probably we are reaching a stage where 1 or 2 years down the line, and even infrastructure is developing in a big way here. We are having riverfront. We'll have soon this city and Mumbai will be connected by bullet trains. So if you see things in toto, then you will kind of get a picture of how it will be in next maybe 3 to 4 years. Because now office space, you have 20 buildings coming up. They're still under construction. Once you put all things in perspective, then 3 years down the line, we'll be having a very different conversation.
Thank you. So, I would like to thank all the guest speakers who took time out for today's webinar. And this was one of the very best webinar from IFSCA and NSCIX. Very comprehensive presentation that given to the members. So I wish you good luck. And yeah, thanks to our chairman who delivered welcome speech, and all the members for attending today's webinar. Thank you very much.
Thank you everyone.
Thank you, Arjun ji. Thank you, Shital ji.
Thank you so much.
Saurabh ji.
Thank you, everyone.
Thank you,
And
sir.
we
Thank
should
you, Dharmesh.
conduct more such webinars for our members, for educating them about the GIFT City and IFSCA and
Yeah. Thank you.
Sure,
Thank you.
sure.
Thank you.
Thank you. Yeah. Bye.